Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep. With your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, everybody. Welcome to this, what is it, Thursday? Yeah, Thursday edition of Benzinga's PreMarket Prep. Spencer Israel, Dennis Dick, Mitch Hotch with you this morning. We're going to talk about the first day in Coinbase. We're going to break that down today. We're going to talk about the different kinds of growth stocks, right? There are like growth stocks that are okay, and there are growth stocks that are not okay. Not okay. We're going to talk about that with our guest, our first guest at least, Christian Fromhertz, who is the founder and CEO of Tribeca Trade Group. He will join the show at 8:35 and 9. We'll have Andrew Horowitz on the show from Horowitz & Company, also the host of the Disciplined Investor podcast. We've got a couple of earnings. We've got a retail sales number at 8:30. We've got Richard Branson selling some shares in Virgin Galactic. We're going to talk about that. We had a midday or an afternoon M&A deal last night. We'll talk about that. We'll take questions from our chats. So a lot to get to on today's show, guys. Go ahead and smash that like button. I know you want to do it. Start your day off with a good old-fashioned smashing of the like. And before I throw it to Dennis or ask him how he's doing, let's give you a quick reminder about the PreMarket Prep swag giveaway. The link that I'm putting in the chat right now. Click on that link. Enter for a chance to win up to $100 in Benzinga swag by doing a number of things. They're subscribing to our YouTube channel, tweeting about it, and entering the secret code, which is haircut. And I'm not going to repeat that for the rest of the day. Oh, we have earnings as well. Bank of America, Citi, Pepsi. We'll get to all that. Dennis, how's your morning going, man?
It's been one of those mornings. I've actually just wiping syrup off my arm because my kids decided that they would eat, obviously, over on the couch, the waffles that we had this morning, and I was cleaning off the couch, and I have syrup all over me. So awesome.
So
Welcome to Parenting and Trading 101.
I was going to say
syrup on your arm, trading with your fingers with syrup on your arm.
I was going to say we're in like the late stage. This is like a late stage pandemic syrup, right? This is like, like end of the pandemic cycle. Like no, there are no rules anymore, right? It's
that's
just
that's how you go.
There's syrup everywhere, on the couch, on the TV. Doesn't matter at this point,
We got some fantastic breaking news here. I don't know if it looks like Pfizer, Moderna. I'm just getting a headline here that they cause blood clots as well.
Oh, Jesus, really?
Yeah, I just saw this go by. Study is showing, just a study. I don't know where this is from. It actually was just tweeted out. Just grab the tweet here for you. It just popped up at me. Great follow, DJ. This is from Barron's. I'm not sure if this is just breaking or if this was out this morning, but Pfizer, Moderna, COVID-19 vaccines also trigger blood clots, a study finds. I got the link here to Barron's article. When did this come out? Clicking the Barron's article as I speak.
Pfizer is down.
Maybe this has been out, and maybe it's just an opinion piece. So I just clicked it. It is from Barron's, so this could just be an opinion piece.
They don't break out. They don't really.
It's not like a headline that's breaking news here, but it says the risk of contracting blood clots is about the same in Pfizer, Moderna's vaccine as is in AstraZeneca. So all of these vaccines apparently in a very small scale can cause blood clots. It looks like so. At least that's what the Barron's article is saying. We haven't dug into that yet. I just actually just had a pop up at me.
Okay, I mean Pfizer is. There's a red candle there on the 15-minute pre-market chart, but I mean, I don't know.
BNTX is a better way to look at it too, because obviously they're and it's up, so I don't think they're caring too much about it here.
Yeah.
So again, I don't know this study. I'm just saying it just popped up at me here. So
Robert's saying that the Pfizer BioNTech causes more blood clots, but you and I aren't doctors, so we
We're not doctors.
No.
We know that it appears there is a very minor risk when you take this vaccine, and we mean minor, like 1 in a million in the case of Johnson & Johnson.
Literally 1 in a million, yeah.
Literally 1 in a million of getting a blood clot. But there's a lot higher risk if you get COVID of getting blood clots. So I'll still choose the vaccine.
That's it. I'm with you on that one.
Yeah.
All right. Should we start with Coinbase or save that for?
Yeah, let's do it. We can tie it
something.
into Kathy. We can it ties everything together here, Spencer.
Wait,
so let's
Mitch.
do it all.
Yeah, I was reading through that article for you, Dennis.
Yeah.
So it says, like, it said that 5 in a million, but it said in both cases the risk for blood clots is much higher for those that have contracted COVID-19 before.
So that's where it's happening too.
That's the catch. All right.
I mean, really, and we know in the case of severe, I think I was just reading another study, and these are all just studies. So, you don't know how much relevance to put on, independent studies because how many people are in the, how many people do they study. But it was something like out of hospitalized people, it was something over 20% of hospitalized COVID patients had clotting issues. So it's literally when it gets, some people obviously are getting this and not getting sick at all. Jason was sick for a day or two, but the people who are getting hospitalized, 20% of them look like they're having some serious issues with clotting. Yeah. So that's there's definitely a link between blood clotting and COVID, and so it's not surprising that maybe this vaccine has a linkage as well. So small risk here, not good news ever clotting, but again, these are even small risks even if you get COVID.
Exactly. Okay, so let's start with the Coinbase talk by going back to yesterday. We did a contest spontaneously live on the show. I was like, I don't want to deal with this. Mitch was like, don't worry, I'm going to copy and paste it all into a sheet. Mitch did that. We asked you, where is Coinbase going to open? And Mitch, do we have a winner?
Yes, we do. Yes, we do. I'm going to go ahead up and put them on the screen here. I mean, it's Mark B with a 381. So let me go ahead up and open this so I can show you exactly where it was.
381 was the guess?
Yeah, 381.
Did somebody get it?
Yeah,
that was it.
On the money?
Well, it opened at 380, right?
I opened at 381.
No, okay, so we got 380. His guess was 380.
Okay.
381 was where it opened.
Right,
we did get someone that
Who was that? Let's give that person some props.
Mark B.
Nice job, Mark.
And there was someone that got 381, but they came in. We cut it off, and they came in after we cut it off.
Well, who was the person that got 381?
All right, so 381 I don't have, but I'm going to highlight here exactly the comment here, and I'll put it on the screen here. Let me zoom in.
Put it up on the screen. So
let me zoom in here.
So Mark B, email PreMarket.
Mark M. Smith.
M. Smith. Okay,
there you go. And he put easy on there, like if he already knew the price.
It was easy. 380 easy. He's all over it, man. Nice job.
Okay. M. Smith, email premarket@benzinga.com. Put
at 901.
Put Coinbase winner in the subject, and so we'll see it.
Get some swag.
Some people were close, like this 378, not too bad either.
Yeah,
but we had over 530 entries, guys, in about 3 minutes.
530. It was 530 entries in the chat in 3 minutes. I told you there was a lot coming.
So
they were just
like, guys.
I was like, you got your work cut out for you, Mitch.
I love it. Thank God for Excel.
We got to do more of those.
Yeah. I mean, it was fun. It was fun for sure. And we're doing a swag giveaway this week, so we got to do more contests. I'm with you on that. All right, Coinbase. So opened at 381, reference price 250. They gave it some room to breathe. It popped in the first 15 minutes, and it dropped, and then it kind of just hung out around 3.
Let's see the chart.
All right, yeah. Let me pull up a chart so y'all can see what I'm looking at here, because I'm looking at my own chart and I'm not sharing it with you. Here's my chart on Benzinga Pro. So we got the pop, we got the drop, and we just sort of hung out around 330, 340 for the entirety of the pre-market session. Popped at 4 a.m., just kind of hanging out around 350 here. So it did open at that $99 billion valuation, which was much closer to where it was valued on the private market a month ago. Not anywhere near that reference price valuation that they gave us Tuesday night. So it was an interesting day. It was, as you can see, as is normal, volume tapered off throughout the day. This is how pretty much all IPOs work. There's a ton of volume on here. Let me pull up a 1 minute chart so you can see. There's always a lot of volume on that opening minute, and that's where most of the volume happens on an IPO. So tapered off throughout the day to be expected, but an interesting first day. Kathy Wood bought some shares, bought a lot of shares yesterday, and all things considered, it opened, around the time we thought. It opened at 1:30, and all things considered, a pretty good day, I would say. For nothing crazy happened. It popped, it popped up after, and then it dropped, but that's okay. It's to be expected. Volatility is the name of the game on IPOs. So nothing crazy happened. Dennis, you probably didn't trade this at all, but all things considered, it was a relatively, it was an okay day.
I don't even bring it up on the first day of trading. I don't even look. I looked at where it was opening, and I looked at it for about 3 minutes, and I was like, if I look at it for too long, I start trading it, and it's just basically gambling on the first day. So there's no point to me trading that on the first day. That is just not my cup of tea. I make my money from relationships. Like I said, I was, using the relationship-based trade, which was a very good trade. People were really giving me heat, saying, "Oh, look what happened to Dennis when everything fell." I clearly said in the pre-market that I sold all my shares that I had overnight. I wasn't trying to take it into. I think we also clearly said that it wouldn't surprise us that this trade reversed. Yeah. That this is, the classic buy ahead of the catalyst and sell on the catalyst. I think Mitch, I think you, I think Mark, I think everybody on this show kind of said that we wouldn't be surprised if Bitcoin rolled over after the IPO happened. And that's what we saw. Well, so, we called this despite all the heat that I took on Twitter because I tweeted out that the overnight trade worked well. I went long Tesla. I went long Square. I went long PayPal. I went long Mara. I went long Riot. I went long BTT or BTBT. I went long a lot of Bitcoin plays ahead of it. I sold them all at 7 o'clock in the morning yesterday morning, which I clearly said at 8 o'clock on the pre-market show that I'm no longer in any of these trades, so I could freely talk about it. But it worked, that buying ahead and then selling. Again, I just want to clarify to traders is that I don't take risk of the event. I'm not in it for like, okay, I think this is gonna. I just know usually when you have a catalyst, there's usually a run up into the catalyst. Yeah, that is what I'm playing as the run up into the catalyst, not calling the catalyst and saying, oh, it's going to continue to go higher or lower. On an earnings event, on on a direct listing IPO, it's a crapshoot. They might pull the rug out from under it. Maybe it continues. But that's not my job to come in there and try to call where it's going after the fact. I just was calling that I think Bitcoin's going to show some life, a run up ahead of the event. So I played ahead of the event by buying the night before and then selling literally 5 hours before the Coinbase direct listing actually, we actually got the pricing of it, 381, that it opened. So that's what I am playing is that event. That's the lower risk play. I always like to control the risk. You're coming in and buying Bitcoin on, at the, after the Coinbase, then, that's a riskier play. So it had a predictable run up ahead of the event, and I was paid for that. So if you're buying it after the fact, that's gambling.
Yeah, I think one thing to remember, and you do very well at this, Dennis, is that you play, and I call this the actual catalyst. You're playing the catalyst, but not playing the after effects of the catalyst. Yes. I think when you start playing the after effects of the catalyst, you just don't know where it's going to go. But at least beforehand, when you're playing the catalyst, at least you know what's coming. And so before then, the investors try to get in because they're trying to front run that catalyst, right? And the news flow, it usually goes like you already kind of hear what's coming, the rumors, and then that's the flow. The flow starts going into that. Once the actual news hits, it completely changes the perspective because, like, let's say for coin, a lot of people were starting to see that it was going to open up a little bit higher, and how is this going to affect those stocks?
It's buy the rumor, sell the news. I mean, it's just buy before the catalyst, sell before, sell on the catalyst is what the market did. So it sold off substantially. So where does it go now? I mean, anybody's guess. The reason it is up this morning is not anybody's guess. The reason it has rallied 24 points here this morning is because of Cathie Wood. That is why, a little bit of a bounce, but it is up 7%. It is getting a significant bounce. And that is because Cathie sold a pile of Tesla to buy a pile of coin, and people will blindly follow her. They will continue to blindly follow her. We're going to talk about all of this with Christian Fromhertz at 8:35. He's got some great Cathie stats for us, and we'll talk about the rotation that we've been seeing away from Cathie stocks in the last 3 months, and obviously into more value names. But this is her type of stock. Growth at any cost. She doesn't care. She's all about growth. There's a pile of growth in Coinbase. I mean, if you're investing with Cathie, you know what you're buying. You're buying growth at any cost. It has worked phenomenally for the last 5 years. Is it going to work phenomenally for the next 5 years? I am skeptical, but it might. I mean, we might just be in another raging bull market. If we continue to be in a raging bull market, growth is probably going to perform. High valuation names are probably going to perform. But we'll get into all that. Let's bring it back to Coinbase here. It's getting a nice pop, up 25 points. It's day 2. It's way too early for me to start calling this, but I'd be skeptical to chase it on a Cathie pop, because what we were seeing this morning is a Cathie pop. They're talking about nonstop on CNBC how she just put $250 million in it. I've seen it on there 3 times already this morning. Mm-hmm. So, I mean, people are like, oh my gosh, Cathie's bought it. I got to buy it too. I got to get in when Cathie gets in. And you are getting in when Cathie gets in. We don't know what price she paid yesterday, but you're probably getting in, at those prices. The thing was over 400 at one point in time. So you're buying a dip. I had another buddy text me, yeah, I bought the dip too. But again, valuation, we compared it to ICE. Think about, what ICE is the International Continental Exchange, ICE it's traded as. And the Intercontinental Exchange, sorry. And it's obviously owns NYSE. It owns a lot of businesses and traded businesses that have been out there for forever. Forever. It's got a valuation, Coinbase, significantly higher than ICE at this point.
It's not just ICE. It's ICE plus NASDAQ. It's ICE plus NASDAQ.
ICE plus NASDAQ. So all the other public exchanges equals Coinbase right now. So if you think it, the other issue too that I have is that you're looking at the margins and the spreads they're making right now. Competition is going to come for Coinbase something fierce. You think it's coming for Dash? It's coming 10 times harder for Coinbase.
Yeah.
There is going to be a squeeze. They're making ridiculous spreads right now on that. Like somebody was saying it's like 1% spreads, 0.5, 1% spreads. I don't know if that's true or not. I don't trade on Coinbase, but I will tell you those spreads are going to come in. So, what ICE makes on a trade is literally, they got the maker taker. They're making fractions of a penny. Like fractions of a penny. So is it going to come and be that efficient? I don't think it's going to get that efficient, but it's coming in. You're not going to see 0.5%, 1% raking in these spreads. Competition's coming. That is going to squeeze the margins significantly there, which makes me not as confident that, it's just going to be 1%. We're just going to grow and grow and grow. The customer base goes up. We keep the 1% margins. Customer base can triple. And if the margins fall, by 70%, you're in the same spot. I think the margins are going to fall by like 95%. So the customer base has to go up a lot more to keep those margins. That's my overall analysis. So I'd be skeptical paying a ridiculously high price saying the growth is coming, because the customer growth base can coming, but the margins, those spreads, which I understand better than anyone as a market maker, are going to get squeezed.
Yeah. And it's already there. Coinbase is the largest crypto platform or exchange, but it charges the highest fees. So their competition's coming. It's here, right? There are other exchanges that are public. Quite frankly, I mean, it's not even.
You don't think Bitcoin is going to Intercontinental Exchange, NASDAQ? They're all going to get involved with it. I think they're all going to get involved with it too. At some point. Then once if crypto sticks around, which I believe it is, I'm long Bitcoin, full disclosure.
Yeah.
If crypto sticks around, which I believe it is, I think all the other exchanges are getting involved too. So eventually that competition is going to be very intense for all of those customers, and the spreads are going to tighten. I mean, if you're paying a 1% or a 0.5% spread on Coinbase and Intercontinental Exchange or NASDAQ can do her for like 0.1%, where are you going to go? I mean, you're saving yourself just a significant amount of money, especially if you're an active trader. You're going to go to where you can get the better spreads. It is going to get competitive. The spreads are very competitive on the public exchanges. And if crypto continues to grow like it does, those spreads are going to tighten substantially. So these nice, juicy spreads they're getting right now, I don't think in 3 to 4 years they're even getting close to that.
Speaking of Bitcoin or crypto in general, we do have a breaking headline here from the Benzinga news desk. GMBL, this is a headline we just broke a few minutes ago. GMBL Esports Entertainment Group is launching a crypto mining application. They're going to let your idle computer mine Ethereum for you while you're not using it. So this was just out a few moments ago from our news desk. They're acquiring a company that will enable this passive mining to happen for your gaming PC while you're not using your PC. So GMBL popped on the headline, giving back some of the gains now. But that was the headline a few moments ago. If you're wondering why GMBL popped, that was why. Esports Entertainment Group is acquiring GG Circuit, and they're going to launch an application to help your idle gaming computers mine Ethereum for you while you're not even using it. That was just out a few moments ago. Okay.
That's a small company.
Yeah, small company. Small company.
Anywhere.
Yep, exactly. We mentioned ARK Invest and Kathy Wood. They bought 750,000 shares of coin across 3 different funds yesterday.
Yeah.
Dennis sold some Tesla in the process. So a big buy, not a surprise. I talked about this on Tuesday. I talked about on my ETF show, like what are the ETF implications of Coinbase? Well, we thought ARK, right? We thought the IPO ETF. And we thought like Block BLOK. And so no real surprise to see ARK jumping in with 2 feet here on the first day.
It's her kind of stock.
Yeah.
It fits her fund. If you're buying ARK, you know what you're buying, like we've said. So that fits right into, it's very clear, very transparent of what she buys. She buys disruptive technology that has, high growth rates, and coin fits that bill.
Maybe we should have we basically spent the entire pre-market show talking about those types of stocks, right? And about like the whether you want to call them the Kathy stocks or like the type of stocks that spent all of last year going up and now cannot seem to rally. Maybe we should segue into Virgin Galactic because that's one of those stocks.
Yeah, it's a stock that I love too.
Yeah.
I mean, I was on board this all the way up. And I sold some of it at the high. Like I sold some, not the highs. I sold at like $51 or $52, which was pretty good. And I kept a piece, and I wish I wouldn't have kept any. And then it rallied back up, and I sold the rest of it. Yeah. So I'm completely out of space. This sale last night, like you said, isn't maybe as big of a deal as maybe the market thinks it is this morning because they're hitting it down. But Branson sold 10% of his position.
Yep, he sold about 5.5 million shares at an average price of $26.81. So that's a nice chunk of change. It was part of a planned sale. It's important to note that I think this is a 12B5 sale. This is like a pre-planned sale that insiders can file essentially with the SEC saying, I'm going to sell X amount of shares over Y time frame. And that way they really cannot be charged with insider trading at all. So it's not as big a deal from that standpoint. It's not as if he's saying, oh, my God, I need out. It's like this is a pre-planned thing. That being said, this is the first time the market's becoming aware of said sale. That's perhaps why it's notable this morning.
Yeah.
Like we say all the time, there's one reason to buy and a million reasons to sell. The only other thing to note here is that Chamath also – He exited out entirely. He's out of Virgin Galactic. He sold his entire stake. So Branson's the founder. He's not going to do that. But that marks 2 major insiders, influential insiders who have now sold this stock in the past couple of months. And it just goes, if you just zoom out, right? This is the kind of stock that rallied all last year and now just cannot seem to catch a bid.
It all turned, we know, 2 months ago. And the names where value started to matter. The day, we can thank GameStop for this to a certain extent, and some of the great traders at Reddit, because they are value traders. I've talked about this on the show. They're not, there's a few storied stocks in there, but if you look at the stories, they're looking for value. They're looking, they're not looking for, paying ridiculous prices for stocks. At least a lot of that thread. So space was working well, and even when I was in it, I was like, you knew it was riding on story. And last year in 2020, story is all that mattered. Valuation did not matter. That is not the story today in April of 2021. Valuation does matter to this market. It is why we have seen a substantial rally in all of the value names and a substantial sell-off in a lot of the higher Cathy names. And we'll talk about that with Christian Fromhertz again in 10 minutes. I'm teasing it one more time. But SPCE down $1.50. I look at it and say, okay, yeah, 25. This is, it's significantly lower from where I sold it, so I could scalp back in. But this is a story now that has gone out of favor. This is a valuation that, it doesn't even have revenue. So we don't even know, like right now, to even give it a valuation. I mean, I think there is going to be revenue. I think it is going to maybe eventually in the long run make some money. But in the short run, it's not even, we're years away from profitability here. So could this get another 50% haircut from these prices? It absolutely could. I'm not coming in here. I don't even have a taste for it to come in here. Maybe if the technicals turn, I know you can say there's good support, and there is good support down at 23. And maybe we test that today on the Branson sale. We're at 25 right now. So I think you're way early if you're coming in at 25.17 this morning. It is oversold. That is one thing going for it. But all of these high growth names, this high P stuff, low revenue names have been oversold for a while, and they continue to remain oversold, and they don't want to rally into the market rallies, and they don't rally. I mean, space, another story here today. Yes, the Branson sale probably weighing on it, which I tweeted out last night, but it's, SPY's up 2. It's down another 5%, making new lows on the move. Making new lows on the move, you don't want to own those stocks. When I say they make a new low, you got to go. So this is doesn't have any momentum, and there's no value investor that wants to touch it. So there's no Momo traders in there. There's no value traders in there. This is where you start to get the gap and the relentless selling pressure. And what else I wanted to say is there is a lot of stocks, a lot of these names that this is just following March 2000. And I was an active trader in March 2000. I can vividly remember the trading. People who, maybe just, read about it think that the tech bubble just crashed. We just went down 80% in a week and a half, and, everybody lost all their money. It took 2 years for the NASDAQ to bottom. 2 years. That crash didn't happen overnight. We called it a death by 1,000 cuts. The growth names just went down a little bit more every single day. A little bit more every single day. And there was a value trade in there too. Eventually they started selling everything, like I said, because they had to start raising cash because they were getting killed so much in the value names. But, I watched Lucent Technologies, the most widely owned stock, go from $85 down to 80, down to 75, down to 70, down to 60. 2 years later, it was $2. So this was an AT&T spinoff, the most widely owned stock on the exchanges back in 2000, Lucent Technologies. Obviously, eventually became Alcatel-Lucent, bought out for $4. It doesn't help the person that bought it for $80. So it's looking like this type of market for some of these high growth names. And that's why I am now very conscious of what you're paying. It's not surprising that stocks like Google have caught a bid because it's growth at a reasonable price. They've moved away from growth at any cost to growth at a reasonable price. That's the way this market has moved. Space fits the bill of a stock that is following the tracks of like April, May, June of 2000. And if it does follow that track, it's probably going a lot lower. I know people don't want to hear that, but if it does follow that, and if we still stay in this value-oriented market, space is probably going lower. That's my opinion.
I just want to add, of course, the news of Wednesday that Blue Origin's test flight succeeded. They keep trying to get their test flights to succeed. I think what you're seeing here is also it could be a change. It could be people start looking at Blue Origin and saying that SPCE is just not in favor anymore. Until they get those test flights.
I want to interrupt you. I'm sorry. I lost track of time. 8:30. We just had a number. I don't know if you care, Dennis. Jobless claims and retail sales. I don't know if that interests you.
Sure. Give it to us.
Okay. Initial jobless claims for last week. 683,000 jobless claims filed versus 700,000 estimate. That is lower than the estimate and lower than the prior week. Where's my retail sales number? Estimates were for retail sales to rise 6%. And I don't see it yet in the pro feed. Do we have retail sales? Bueller. On the retail
That's sales. Okay. You know what? The market's not moving. So honestly, if you had the numbers, but we don't care enough to wait for the numbers.
Okay. I do see 9.8% increase in retail sales month over month. Holy moly.
That sounds significant.
Remember that retail sales dropped 3% in February. So a 9.8% rebound. Actually, no, that would be 12% rebound.
People are buying stuff. We know that. People are buying, everything. Like, we can see the inflation everywhere. I mean, we are going into this inflationary environment, whether the Fed wants to lie to us about it or not. Prices are rising on everything right now, like used cars, used boats, lumber, you go across the board, even food, you're seeing prices of that, right? Energy, everything is going up in price right now.
Yeah.
We are in full on paying for just printing so much money. This is an inflationary environment that we're in. And this is why I want to stay in stocks, because if you're in cash right now, you're getting crushed. I know I have some cash sitting there and we're waiting for my build and I'm getting crushed in it. So I wish I was in the market, and obviously I wish I had some more lumber stocks, but I mean, cash is just trash. And so even though we're talking about, these stocks like space going down, there are other stocks that just continue to go up every single day. SPY makes new all-time highs every day. It's, I believe, the biggest position of my long-term investment account. Why? So I don't have to worry about my long-term investment account. You can have some fun in different stocks, but for the most part, I'm moving with the market. So, I mean, those are core. SPY has been the best place to be in the last few months, really. You're trying to pick these growth names. You're trying to pick other names. There's so many people who are stuck in a lot of, of the higher growth names that were really working in 2020 that are not participating in this, or even worse, going down. And then, SPY just keeps going up. It's a value-oriented market, continued to be driven by value. One stock that I bought 2 days ago on the dip was U.S. Steel. I'm like, I think the infrastructure is still happening. I'm seeing prices of everything going up. I want a steel play. U.S. Steel pulled back significantly. It's a stock in a clear uptrend now, $27.40, all the way down, got down to $20.90. I bought it about $21.50, I think. So I'm up. It's $23.50 this morning. So I am up in a little bit, but I just want to increase my exposure to those kind of sectors. So we know I've had Nucor for a long time, but I took a dabble in U.S. Steel, and I think you got to keep buying those kind of plays on the pullbacks, because you know what? Infrastructure is still happening here.
Well, yeah, I mean, infrastructure is always happening. It's kind of
but they've got the infrastructure. I mean, buildings, and obviously you look at the price of lumber. What about people, like I was saying, some people going to steel studs, where we didn't have, the choices before because it was so much more expensive, but because lumber prices have went up so much, steel's an alternative right now. So I'm not joking. We were talking about on our build. I'm like, I can almost get steel studs at the same price as lumber studs. It's better product. So, I mean, there's stuff to think about there. You got lumber, that's went up 250% or whatever it's went up. I got to think steel has a catch-up trade here eventually. So I like steel.
Taking a look at Home Depot and Lowe's?
Unbelievable, Mitch.
Unbelievable move.
Look at the moves.
Look at that. You don't see that move in HD unless we got probably the inflation that you're seeing.
Yeah, well, 2x4 is $2 to $9. Sheet of plywood goes from $11
PVC
to $50.
pipes, bro. PVC. Even so, I heard that plumbers are literally going to Home Depot and just hoarding materials because they don't want to pay the inflated price and see it keep going up.
That's we pre-bought on our build. I pre-bought a whole pile of materials because you know what? They don't see my builder. This is just going up every day. We got to buy it now because it keeps going up. I mean, maybe we're buying at the highs, but we pre-bought a month ago and the prices have all gone up again.
Same chart.
I mean, this is an inflationary environment, whether the Fed wants to believe it or not. Yeah. And maybe we're just picking on building costs, but we're seeing inflation. Like I said, my buddy bought a used boat 3 years ago for $9,000, sold it for $26,000, and now he's seeing the same boat online online for $30,000 to $35,000. I mean, the prices are inflating everywhere around us. It's just the Fed's choosing to look in the places it's not.
All right, let's bring on Christian Fromhertz here, founder of Tribeca Trade Group, joining us from what appears to be a WeWork. Is that right, Christian?
That is correct. We work in New York City. How you guys doing?
WeWork is still around. Yes, awesome. How are we doing?
Is that all? What's the office space behind you there going on, Christian?
So that's just someone else's office. And if you've ever been in a WeWork, it's as you can see, it's kind of fishbowl offices and so forth. So you can kind of walk around and see how they're doing, basically.
I'm just somewhat concerned that there's nobody behind you. It makes me not want to invest in WeWork.
Well,
beautiful office, though. Beautiful office.
Yeah. They are nice offices, and I've been at a WeWork office for about 3 years now, I think. So I like it. It works very well for me. My office is right on Wall Street, so it's a good place to be.
So Christian, you were talking and sending me some stats, which we want to get to here. We're just looking at this growth versus value trade. We've been talking about it on and off all morning here. And obviously we know Kathy Wood is all about the growth at any cost. We've been talking about this value-oriented market. So if you can give us some of the stats that you were sending me overnight here, you've compiled some interesting statistics.
Yeah, sure. And I think it's just kind of interesting. It always seems to me that the hot investment managers get the attention, and it does go in cycles, right? And obviously, ARK is really good at what they do, but it's a pretty thin slice of the market, and you guys do an awesome job covering that and the attention. But yeah, if you look at the year-to-date stats, the ARK Innovation Fund is up about 2%, and SPY's up 11%. And over 3 months, the stats are a little bit more skewed. ARK is down about 10%, and SPY's up 9%. So 19%
underperformance in the last 3 months. 19%.
So, where that goes for me, and like I said, you guys do an awesome job covering this, is that as a retail investor, we have the ability to choose, do we want to go into super high revved up growth right now, or has the market changed a little bit? And can we go down some different avenues, and can we be a little bit more diversified if the market, really calls for it, which I think this year we are definitely seeing something different than what we experienced last year. So I think it's just kind of good to kind of look at these points and realize as a individual investor, you can invest in this, but you can dial up or dial down your allocation as the market is showing some other attractive places to be in 2021 so far.
What are your thoughts here? Does this value trade stick? We've been seeing it really for the last 3 months, and you can clearly see it in the stats with ARK. Obviously, 19% underperformance on growth, and we know she's higher growth. Does this stick, or do we eventually just start piling back into the names that were working 2020? What are your thoughts?
I think it's definitely something to keep an eye on. But for me, I'm a trend trader, so I look at both the longer term trends, the medium term trends, and even the short term trends, because I think I'm similar to what you're doing in terms of I have a trading account and I have a long term account.
Yeah.
So definitely I have names, growth names in my long term account. But right now, I think the trend in commodities, I think the trend, you guys were just talking about Home Depot and Lowe's, but also the home builders. I like those trends right now too. And I think in the immediate term, there's a lot of really good setups. If you look at the commodity space, and if you look at, you were talking about US Steel, it had a really nice day yesterday, kind of, digested. And I think right now, the way that we're seeing this market move on a week-to-week basis, we're seeing, at the end of last week, it was really strong retail names, specialty retail. So there's a lot of opportunities in this market. And if you're a quick, if you can move pretty quickly, and if you're a nimble trader, you can really kind of catch some of these moves. And you don't have to, in my opinion, you don't just have to park your money in just one particular slice of the market. There's just a lot of opportunities out there. I really like what's going on right now in copper. FCX had a big day yesterday.
Yeah.
If you guys want, I could share my screen.
Yeah, can we do that? Yeah, let's do that.
All right, let me just give me a second, because I haven't used this app before, but I do see a share button down here. Okay, let's try this. Share screen.
Just don't share anything we don't want, or you can't share. Oh no, I don't.
Let's see.
I don't mean that nefariously. I mean that don't share anything.
Sharing
private information.
You would get in trouble for sharing. Yeah.
All right, so it's giving me the option, because I have multiple monitors here.
Pick your monitor.
Okay, that's good.
Okay, so I got the S&P up, but pretty crazy that we're still, the trend goes on right now. For we had a little bit of a dip yesterday, but we're right back at it. But I like so to start with, and it's not the only name that I like in the space, but if we look at the daily chart of Freeport, right, take a look at the volume yesterday. So I'd love to see volume like this on a breakout. And what's nice here is it's not extended. It's obviously in an uptrend, but it's kind of come in and had a nice digestion here. And we're just starting to break higher on high volume. So I'm looking at a target at 41, right? So this is something where, if you've been playing some of these areas, you might have a little, you can generate some alpha this year versus being all, in one area of the market, high growth, which I think is good for, long term. I think you could kind of really pick up some performance and things like this. Tech resources was another big one yesterday on nice volume. And again, you look at these and, they're not exactly extended. The trend is really nice and defined, but I mean, I love that big volume yesterday in something like this.
Huge move here. Christian, talk about, what do you do as a trader when your stocks start, like you say, you're a trend follower, you're following trend. What do you do when your stocks break trend? Like, I mean, there's so many traders and newer ones that absolutely refuse to take a loss. Do you have a defined risk parameter where you look and say, okay, if it does this, I'm going to get out? Do you hold on? How do you approach it? Your discipline, if the trend obviously starts to break.
Yeah, it's a great question. And discipline is a big thing right now, especially watching some of these moves and what has transpired in the first quarter of this year. But yeah, if it breaks trend, I'm out, and I will always have opinions and where I think things are, a good trade and so forth. But above all, I let price and trend confirm that for me. It's always right. You can't really argue with price and trend. So I know exactly when I'm wrong and when I'm right. I use a system called the market webs, which, tell me where there's volume at price. And I also look at the 50-day moving average. And I think that's a great simple indicator right now. It's just to tell you if something is in an uptrend or if it's in a downtrend, in terms of, medium term, right? So that's how I look at it. And then those names that, I'm in, and if they break trend, break 50-day moving average, it's my job to continue to watch those names. And, I think it's kind of been interesting the last couple of weeks because, as you talked about a few days ago, just the opportunity to get back in some growth names. It's not that I completely dislike growth. I just think that there's a lot of opportunities other places too.
Well, and it's just a matter of there's so many traders that are trend followers. And when they start to break, like I've always talked about this gap between value and growth and value and, a trend following strategy. And, I, as a trader, like to follow trend as well. But as an investor, I'm more of a value approach investor. But, when you get certain stocks like, SPCE, we were just talking about, and, it clearly breaks trend up around $48, $49 back in February. I mean, there's a huge gap and when it starts to come down, because once you get all the momentum traders and say, okay, momentum's gone, I'm out. The value investors are saying, well, they don't even have revenue, so I'm not buying this. So you have basically a gap where there's just not a lot of willing buyers. And that's where you see this huge fall in the next couple of weeks, as anybody who's in there maybe is getting out as well. But there's just a lack of buyers once trend breaks. So, these obviously names that maybe are higher, not value names, because you always have value investors coming in like in dividend stocks, but on these growth names, they are very reliant on trend followers to continue to grow.
Oh, sure. And you've mentioned this a few times. It's a story stock. So as long as there's momentum and the trend is strong, these things can continue. But once you break that trend and the momentum slows as it has, you kind of lose the, it's still, there's a story behind it, but you really kind of lose the wind behind the sails of this. And, the trend to me just looks like, I need to see buyers come back into this. If you look at the volume, right, and what's kind of happened here, you're just not seeing that institutional accumulation here. So, I understand the need sometimes for retail investors to want to buy the dip, but if you're the only one buying the dip, we know that institutions control the market. It's just not going to work out, as well if you don't see that institutional buy-in going on.
Wait, Christian, can you talk about that? You said you're looking at the volume and you're not seeing institutional accumulation. How would you know by looking at the volume who, meaning institution, is coming in there?
Yeah, and it doesn't, for me, it doesn't really, I don't need to know what institution or who exactly is.
No. I meant like, how would you know that it's an institution versus like 10 Spencers, right? Like how would you know that?
Well, I mean, I just think simple technical analysis will basically just tell you that, hey, what we're seeing here is just a change in, basically how the price is moving. So right now, for example, you see Virgin Galactic, and we don't know where the bottom really is in. We know that we've got some support at the 200-day moving average, but we're just not seeing that confirmation that it's an interesting stock for institutions. So that would be what I would be looking for, is to say, hey, this thing has gone down a decent clip. It's down from a high of 62 down to 26. But we're just not seeing that interest where people are coming back and buying that. So yeah, I mean, support to be held, and also we need to see some bigger green bars over here.
Do you think, generally speaking, the individual traders, investors like buying the dip more than they like, or more likely than they are to chase? Like, they're more likely to buy the dip than they are to chase, because it does seem to me that everybody loves to be the one to be a hero and buy the dip.
Yeah, it depends what type of trader you are. There's a ton of different traders. It depends if you're more a momentum trader or if you are kind of a longer term type value trader or investor, where you think, hey, buying the dip and this is something that I think over time is going to do well, versus somebody who's just is basically moving with the trend and so forth. So you have all types of market participants and all different types of styles, and really that's what makes it a market. So I particularly, myself, and I can really just kind of speak for that, but I would rather be looking for because we really don't know where the bottom is of a stock. So I look for confirmation all the time, and that's one of the things too with the move down in growth names that we saw over the last couple months. Is I really look for that confirmation where I can say, hey, I'm going to pick a trade here, and I know exactly where it's not going to work, right? So that's really all about being a disciplined trader, a disciplined investor. And, when you're just, at the end of the day, we're all looking to make money, right? So, the more that we can kind of look at our technicals and have a defined trading system and process, I think the better we are at this game.
People are asking, and QS might be a good, one to talk about here too, where momentum has completely broken and turned sour in a hurry. We do have a negative note. It looks like from Scorpion Capital, they're calling it a pump and dump SPAC scam. I'm not sure this is just, being passed around on social media, but that is why QS is down 10% right now. It just started falling here in the last few minutes. Right. But I mean, here's another story. It was one of these big EV plays that everybody had to pile in at the end of the year, and momentum broke, and obviously it's been straight down, and now it's been a consolidation station here for $40. It looks like that consolidation might actually resolve itself more to the downside. Yeah. But again, this is a name, like you as a momentum trader, this is something you probably don't even look at, correct?
Yeah, that's absolutely correct. And you can see every time this thing has tried to rally, it's failed. Right. Yeah. So I think Kramer actually was talking about this name last night, and it's got an interesting story. It's a disruptor, but for me, I'm not just trading stories, right? I'm looking for names that are actually that they're gonna make money. So this is way out of bounds for me. Like, I would even need to see this thing get above 60 because it tells me that it's trending up. Like, I think so. I think it's more of a short candidate. Would I short it? No. But I think that's the situation. Another name that I always get questions on is Palantir. Well, Palantir for me, just, it continues to trade in this 22, 25 range. I want no part of this name until it starts doing something different. For me, that different is above $26, right?
Yeah.
And that's the confirmation for me. The price is going to tell me I'm right, and and where I'm wrong too. So this thing, I've had a lot of people ask me like, hey, this thing might actually be turning. And I'm like, well, it's got to get back above its 50-day moving average, and it's got to get back above top of value, right? Which is 25.81. So until that happens, I don't really care about picking the absolute bottom of a name. I want to make sure I'm more excited about when a name goes from 26 to 29 or 35 than trying to pick the $2 or $3 where this thing may be bottoming.
It's tough. I mean, when these stocks are in downtrends, I look at it as, okay, you have two basic traders. You have the momentum trader that comes in, there's no momentum. And then you have value guys like me, and I'm looking at my long-term account, like you can day trade anything. But in the long-term account, it's like, well, I don't even exactly know what the hell they do. So I'm like, I'm out as a value trader on this. I don't see, a P multiple of, 20 or, reasonableness. And I don't even think they make money. So it's kind of stuck in the middle of like not that much interest. So you have people that keep buying the dip on this thing. They can eventually, it's going to go back to 35 or 40. But like you said, until it gets above 26, it's got no momentum and I'm not interested. So it's almost a better, wait and see. Let's see if it can get some momentum going. Let's see if the story can turn, and then maybe get interested as opposed to trying to buy the bottom.
Right. And I mean, in something like this, this is the steel ETF. This is right now has me more interested because you got a nice defined trend here. And, again, it's this is an ETF, so it's a smaller ETF, but even still, you could see the nice volume yesterday, right? I mean, that to me is a little bit more where the action is for now. Now, it's important. And, one of the things that we can do as traders is make sure that if you like a Palantir, or if you like, some of the growth names that have been trending down over the last couple weeks to a month, is to set alerts on things where you've got certain pivot points, you've got certain areas of interest. So it's important to keep monitoring these things to see, because we really don't know, and none of us have a crystal ball to say when that momentum and when those buyers are going to return to that segment of the market.
No, that's just it. I mean, you can keep picking on the same names, but I think what a lot of momentum traders, Spinner is a great one too, do well is, you aren't married to your positions. You're not, okay, I'm getting in this and now I'm getting down with it. And I'm going to, okay, well, what do? I got to hold on. I can't take a loss. That's what people think. They absolutely can't take a loss. I've never had a loser before. I don't take losers. I mean, I literally have people say this to me once a week. I don't lose. I hold till it comes back. I mean, this is just a recipe for eventually having a portfolio of losers. I've talked about that a long time. It's a discipline. And if you were all growth and all momentum, you were kicking ass and taking names in 2020. In 2021, it has turned for you. And this is why you need to have discipline to get out of those names when the momentum turns. So, and you guys all identified the new momentum, and you're playing like you're coming on and pitching FCX. You wouldn't even thought of pitching FCX to us last year, at this time. It wasn't even on your radar because it was in the gutter. So again, you're always, as a momentum trader, you're always in the stronger stocks, which is kind of where you want to be.
Right. And yeah, two points there. I would say, number one, that's what kind of makes this market really fun and interesting, is that it's always changing and evolving. And the more nimble that you can be and objective, the more I think you're going to have a good time in this market by, just staying with where, the money is flowing into and so forth. Number two, I have losses all the time. I mean, but really what I try to concentrate on is that there's small losses, paper cut losses. But yes, I mean, it's a huge part of trading. And I've heard you talk about this too. We're going to be, there's nobody out there that has an 80-90% batting average, right? It's just not possible. So we're going to be wrong, and we're going to be wrong a fair amount. So you have to be comfortable with saying, hey, this is not working out. I had an idea and I'm respecting my system, which is telling me to get out here. So it's important to have that system and process over the overall, pick of one particular name or pick of, a couple names. Your process and your discipline is so much more important than those individual picks.
It's a great point, as always. Christian Fromhertz, founder and CEO of Tribeca Trade Group, telling us that if you hold your losers, you're going to have a bad time. Christian, thank you so much. As always, a pleasure. If you're not following Christian, guys, on Twitter, you really should. His Twitter link is in the descriptions at Fromhertz on Twitter. Great follow. Dropping knowledge all the time. Christian, always a pleasure, man.
Thanks, guys. A pleasure as well here. Thank you very much.
Thanks, Christian.
Dennis, do we want to do? We didn't talk about earnings. You want to do?
I know we only have 5 minutes left here.
Dell, you want to do quick ticker time? I mean, there's a lot we didn't get.
Well, let's do the Dell. It's on the top of the news for a lot of people here. It's up 7 points here this morning. I think this is the ring the register event for Dell. I screwed this trade up royally because I was on this show, probably a year and a half or 2 years ago, talking about how Dell gets no love. It was, I was saying, when the stock was $40, when I owned it at $40, I was like, the VMware position of Dell is worth $40. You're getting Dell for nothing. Like you were literally getting Dell for nothing if you were buying this back at $40 because their VMware holdings were worth $40. So I talked about this for a long time. It started to finally, the news came out that they were talking about a spinoff. The stock started to get some love. I sold way too soon. I think I got out in the 60s, and here it sits at $100 a day, and I feel like today would have been my payday. Again, I identify the entry. I'm in the position very well because I'm a value guy and I'm getting Dell for free. Eventually, I'm going to get paid. Today would have been payday. So I feel like if you're in Dell, this is my opinion, I feel like today is the day you got paid. And if I was in it still, today I would actually be selling it. But I sold it way too soon. I got paid, on the rumors of the eventual spinoff. So give us the news. They are doing the spinoff of VMware.
Yeah, they do have an 80% stake in VMware that is being spun off here. They're going to receive around $9.5 billion from that spinoff.
Yeah. So there you go.
And then they're also distributing that money to shareholders via a special dividend. Don't have the exact amount, $11.5, $12 billion total dividend amount, but I don't know what the per share dividend is off that. So yeah, shareholders get a special divvy spin off of their VMware stake.
This is where due diligence and value investing can work, and it did in this case. And again, I just out too soon. Yes, I made money on it. Yes, it was a good investment for me, but I took the first few bites of it and left most of the meat on the bone. So I'm disappointed in myself because I called this, and today I feel like I would have got paid. So congratulations to the long-term Dell shareholders that identified that as well. I know there was a lot of them out there, a lot of good traders out there holding the Dell for the VMware, and I feel like today's the day that you got paid.
Should we do quick earnings quickly? I mean, we had Bank of America. Do we care about Bank of America this morning? Do we care about
not really
Citigroup? Do we care about Pepsi? No, we don't care about any of that.
Nah, not really. No. You can if you want. I was just going to say we should just grab a few tickers.
All right, yeah. Let's do, we have 1 minute before I'm going to bring on Andrew Horowitz, so let's do a couple tickers.
Yeah, I can fly through. Give me three tickers in 2 minutes.
I just happened to see this one here from Hertz Scrambler, GBX. Let's take a look.
Oh man, you go off the board on me. So I'm not following the story at all on GBX. It's been in a hard uptrend. I don't know what the news is today. The stock's down $3.
Here's a good one for you. Okay. I'm sorry. Did you finish? I
was going to say it's still in an uptrend. I would say if it's below 40, I don't want any part of it.
All right, Discovery. I don't know if you saw DSCB yesterday, but let's look at the A here. I don't know if you saw the B.
Well, DISCB can do anything it wants. One, there's no arbitrage activity in there because you can't get a locate, you can't get a borrow, so there's no arbs to keep the price in line. I had a reporter reach out to me yesterday asking me what the hell's going on with DISCB, and I was like, well, there's no arbitrage activity in there, so it can do whatever the hell it wants.
Yeah,
it's loosely connected to Discovery, even though it's the same company, but it's just no shares outstanding, so that thing honestly shouldn't even trade. So it can go wherever it wants because there's just no arbitrage activity to keep the price in line.
All right, I'll do a couple more here. Let's do fuel cell. We talk about this one every so often. CEL. It's kind of the same.
Momentum has broken. Yeah. Story is ice cold. Ice baby. This is ice cold. Again, this is just something that Christian Fromhertz probably wouldn't touch at this point in time. It's something I wouldn't touch at this point in time. It was $2 for forever when I owned it, and I sold it, and I finally got fed up with it, and then it ran to 28. So I kind of hate it for that reason. But the momentum is ice cold. I mean, Plug Power is your leader here. Plug Power starts to show some life. You know how I'm a relationship-based trader. I trade Plug, I trade Fuel Cell, I trade Ballard Power all the time against each other. Plug starts to show some life, I'll be interested in Fuel Cell and Ballard Power. Until Plug starts to show some life, I'm not interested in any of these. And Plug is trying to make new lows again. So it's hard to be a buyer of Fuel Cell when Plug's going straight down.
A few people asked about TLT, so let me do that, and then I want to ask our guest Andrew about the TLT as well. So, but first I'll do you, Dennis.
Okay, so TLT getting a little bit of a lift here. Again, we know, if you're watching utilities, there's a positive correlation. You're watching banks, there's a negative correlation with TLT. With all the bank earnings, it's not going to be as much correlation as there is on a normal day. We've stabilized. We are still in a clear downtrend in TLT. There is a very clear downtrend here. So we've stabilized. We need to get above 140 to start to get a little bit interesting and say, okay, well, maybe, the TLT death march here has cooled at least for a bit. But I mean, we're still in a clear downtrend, so it's hard to get bullish.
I want to ask our guest about TLT. Andrew Horowitz is the president and founder of Horowitz & Company and the host of the Disciplined Investor podcast. Andrew, good morning. What do you think of TLT here?
Good morning, gents. Hey, TLT, it's interesting. I think what's happening right now on two fronts with both the tech and the growth and with the bonds is a massive amount of rebalancing. What are we on the 15th of April right now?
Yeah.
And if you look back to where we were and how the assets split dramatically the first quarter of the year, where we saw that, banks, energy, financials across the board with value were really in favor by a long shot. And we saw those breakdowns of the high, momentum names, as well as the really stretched PE names and tech and all that. I think there was some estimates of $500 billion to be moved and rotated just within balanced funds alone. And when you have that, there's going to be massive pressure in the areas that needed to be rebalanced into, right? So I think this is kind of what's happening right here. Because if you look at the numbers today, you guys have been talking about it. The numbers today in terms of employment, in terms of some of the inflation numbers we saw this week with PPI and CPI, and kind of across the board with manufacturing numbers, you would think the relationship should be that bonds should start, moving to a point where yields are continuing to move higher. But I think this is as I call it, mechanical situation right now where we're just seeing the end effects of this rebalance.
Interesting. So I want to ask you about sort of the theme of our show, I guess, every day for the last couple of months, which has been like how you're approaching all the growth names, the ARC stocks that were on fire last year and then have cooled off significantly this year. Are you hands off? Are you waiting for the rotation? Are you rotating into other assets right now or other areas of the market? How are you approaching those high growth names that are ice cold right now?
So there's high growth names, and then there's ridiculous growth names, right? Those other names that are like, where's the value in this at all? Yeah. I'll trade those personally. For client accounts, though, it's really a hands off for the most part. There's a couple of names in there, some of the EV space that I would kind of work in, some of the solar names that are interesting. We just sold a couple of solar names. We said, we're done with this right now. That thing is kind of gone. If it hasn't moved at this point, or if it's moved up enough, some of the names we kind of took a lot off as it was rising up, and then kind of left a very, very small piece, less than a 1% position in a portfolio. Other than that, I just don't know how long you can ride a train that there is the only thing that it's based on is speculation. That's it. The simple as that, right? A lot of these names were only all about speculation, no earnings, no potential earnings. And when you start hearing the words on the road or the path to profitability, scares the crap out of me.
You want to share with us what those solar names were?
I mean, you look at, just like TAN or SunPower or just any of those basic names, but I kind of out at this point.
Okay. So generally hands off, and I guess it meant that you missed out last year, but it meant you're not paying for it this year.
Yeah, I mean right, exactly. I mean we did ride some of those up, okay. But yet at the same time maybe not topped out, but yet didn't bottom out either, right? Kind of just at the end of the day it was like, okay, that was fun. Let's move on.
Yeah. Andrew, the name of your podcast is The Disciplined Investor. Can you outline for us like your overall philosophy on how you approach markets? There are a lot of people who've joined the markets in the last year or so, who were up a lot and are maybe down a lot now, right?
Yeah.
And I'm trying to reach those people and keep them in, and not let this be another situation where like people that got screwed after the .com bubble just like left the markets forever and never came back. And I want these people that are down in ARK funds or whatever to stay with us here. So outline how your philosophy that sort of zooms out a little bit.
So let me give you two things here, Spence. Yeah. Okay. First of all, what not to do.
Yeah.
Okay. Don't be a button pusher. Now there's no, buy just because you can, right? I mean, that's what a lot of people did. Oh, that name's going up, or he mentioned that on a TV show, and they just go and buy because there's no commission. It's easy to do before, during, or after markets. That is not the way. You have to do a little bit of research here to understand what's going on. And remember, anybody that's giving out a name, aside from you guys here, are probably talking their book to some degree and probably pushing out what they're doing. In terms of what we do, I'll give you, for example, a really, really good example on our long short strategy, which is different than our core diversified asset allocation strategy. But one of the things we do is we have a quantitative screen that says, hey, you know what? You have to have an increase in your earnings growth. You have to have an increase in revenue growth. You have to have an ROE, a return on equity at certain levels. You need to have volume at certain levels, and a whole list of things. That brings you to a discipline that you have to stick by. And we've tested it. We've done it for years, and we know what we want to have. What's interesting, you get some things in there that maybe you would have never bought, or maybe some things that are not in there that you really wanted to buy. So for example, a stock that I would have never bought. It just, even though it kind of looked interesting and all, Williams-Sonoma. Now, why wouldn't I bought that? Because in my head,
the catalog is amazing.
But I walk into the store and there's nobody there. And then I go and I want to buy
the catalog, Andrew. Come on.
Okay, yeah. What's a store? What's a store? So then I go and I want to buy a lemon and lime squeezer. It's like $28. I'm like, wait a second. That doesn't sound right. That sounds a little bit hot. I look on Amazon. The same thing's like $12, $8. So I'm thinking to myself, again, I'm thinking because of my own anecdotal information and evidence of what's happening. This is not a stock that anybody's going to buy something from. Meanwhile, that chart, how's that chart look to you?
It's pretty damn good to me.
Yeah, last earnings were blowout. Look at that gap to the right on that chart, right? So I would have never bought that stock, and it's done just incredibly well. And the point of this all is that you have some kind of a discipline, some kind of a methodology to screening or to finding stocks, rather than just, hey, what's the hottest thing right now? I was on a show yesterday, and it was a Med Faber's show, and we talked about what was like kind of the past. We talked about Ken Hebner. We talked about the CGM funds. We talked about all these different hot trends that got really cold very fast, because the hot trends always move beyond, right? They move way beyond where they're supposed to be, and then they pull in. It's the last guy holding the bag that's always showing up as a problem. So I think the big issue is discipline's obviously a broad point, but have something where you can replicate and understand what you're doing, rather than just pushing buttons because money's free right now.
But do you wonder at all whether like the grounds have changed permanently due to the ease of investing on apps like Robinhood and Webull, and the rise of not that chat rooms are new, but like Wall Street Bets has exploded. I've been on Wall Street Bets for 5 years, and I was on it when there was like 1 million people or whatever, 500,000 people, or less than that. There's 10, 20 million people on there now. The rise of those platforms and the rise of streaming and Twitch. And you wake up, you roll out of bed, you roll over in your bed, and you buy a stock, on your app in your phone. The rise of all that, the ease of the ease of investing and trading, the breakdown of barriers, has caused permanent shift in the way people behave and the way markets behave as a result?
I don't think so. I mean, I think eventually everything will come back to normality. And the fact is that people are going to go back to work. They're going to get tired of the game. They're going to get tired of losing, because this is a hard business. Yeah, you can get lucky. And I know people that have bought stuff. I had a guy the other day that over for dinner. He's like, oh my gosh, look what I bought. He bought something for $2, 2,000 shares. He sold it for like, I don't know, $10.
Good
I
deal.
mean, that's a nice score, right? So, what was it? I don't know. He just saw it move and he bought it. I'm like, okay, that's great. Listen, $16,000 gain is a $16,000 gain. Take it all day. But, that luck will run out. Right now, what's happening is a lot of this is being fanned by excess money into the system. We have a Fed that basically started a fire. And think of it like this. The Fed starts a fire. They stoke the fire. It's a beautiful fire. It keeps the house warm. It keeps everything going. The government comes in and not only puts 50 gallons of gasoline on top of it, but then they put a massive fan on top of it, and the entire house is engulfed in all this. So right now, where we are at this point is at the beginning stages of the federal government stimulus plan blowing air to ignite this fire. If we get another $2.5 trillion, and who knows how much more stimulus is coming individually, PPP programs still running, is going to be a lot more money in the system. It will last for a while, but those kind of moves on ARK, where I get clients that had portfolios invested calling me up halfway crying that they sold puts against it because they thought it was a great deal, and now they got to take a loan to pay for those puts on the takeout, right? Because it went below the point.
Mm-hmm.
You can't just build a portfolio on 12 ARK funds or whatever, how many funds there are, 5 ARK funds that have a lot of overlap and say they're one thing, but in fact, the space has what, deer in it and some other really weird things.
Yeah, well, the space also owns one of their other ETFs as one of the largest holdings. So it's
Right. Right.
So yeah, to your point, your points about diversification is totally right. Well, last Andrew, before we let you go, we're at all-time highs. What is more likely to you? A slow and steady march to new highs, a consolidation period sideways, or some sort of a retracement here? Maybe like I'm talking the rest of the year.
I mean, I would think that right now, if all goes as planned with the it's all I think about this next stimulus plan coming out. It's all about inflation. It's all about where bonds head to. And I think that there's going to be a continuation probably of a general consolidation. I can't imagine that we have valuations that really spike a lot higher from here. I just can't see it. Now, call me a little bit more conservative, but it seems to me that there becomes a point that we're exhausting all the possible money that goes into the markets. And while we saw the last 5 months, the story from Bank of America was the most amount that came into markets, and it topped the last 12 years in total into equity markets and equity funds. I would think that we're going to probably see, I hate to say this. I hate to say what I'm about to say. It's going to be more of a stock pickers market. You can probably outperform by utilizing stock picking rather than simple indexing. I know that sounds like everybody else on CNBC, which I hate to sound like, but I really do. And I'm not talking my book here because I'm not leading you into one place or the other. I just think that it's going to be a little bit more selective moving forward. You can't just keep powering ahead like this, kind of arbitrary. And not to mention, volume has been crap over the last few weeks. Have you seen that on the major indices?
We're at the low of the year for a NYSE volume. I don't know about NASDAQ, but
NASDAQ was the low, I think, on last Friday.
Yeah,
and that's a weird time of year to be doing that in April.
Yeah, I mean, that doesn't give you a ton of confidence, but maybe it tells you we're going back to like a more normalized market. I don't know. I don't know how to look at that. I
think there'll be spikes in it all. People talk about bubbles, and I think about a balloon, and a balloon is kind of blows up and then pops. I'm not thinking about that. What I'm thinking about is like a medical glove, right? A medical glove, you blow up and you get boop. It starts getting little pushing out in different areas that bubble, but maybe it doesn't blow up, right. But you get these kind of like breaches in the bubble. And, we already saw 3 hedge funds blow up this year. That's a thing that you really need to explore. I know we're limited on time, but I think the whole idea of just pushing in money to bring up valuations, like happened with SoftBank, with WeWork, and how they pushed the options markets. Remember when they pushed the big cap options to force the other side to buy the stock, to bring up their Apple, to bring up their Tencent, and bring up Alibaba, all those. And then what happened with Wang recently, where he just bought Disca and bought Alibaba, whatever he was buying.
Viacom and
right, but the whole it was the PE model. The PE model is, hey, we'll buy in higher, and the whole thing will be valued more.
Yeah.
That's what's happening.
Yeah, and your point about record inflows into U.S. equity funds. Well, maybe the solution is to look elsewhere. Look, there's a lot of other countries out there. Yep. Everyone, there are other continents besides North America, besides the U.S.
Yeah, we're big fans of EM and outside investing as well, and outside currency investing.
Oh, that's interesting. All right, we'll talk more about that. Andrew Horowitz, president and founder of Horowitz & Company, host of the Disciplined Investor podcast. Andrew, always a pleasure, sir.
Hey, Spencer, have a great day, buddy.
Have a great day to you as well. It is 9:16. Let me bring on Neil Hamilton from Get Technical, and let's preview that show if we can. Neil, how are we doing today, man?
I'm doing great, Spencer. How's it going, man?
Doing fantastic. I'm doing legendary. I'm having actually, no, I'm not. I'm just tired. Truth be told, I'm very tired. I'm very tired, Neil. Okay, that's the guy's honest truth. I'm extremely tired right now.
I love your default response is like, I'm good. Everything is okay. I'm doing legendary. And
I'll be honest with you, I'm really tired. I've been here. I've been at the office a lot these past few weeks and months, and went out to dinner last night, which I never do on a weeknight. This is why I don't do that, because
what are you doing going out to dinner on a weeknight? Was this college?
Huge mistake. Epic mistake on my part. I'm so tired right now. I wasn't even out that late. I was out till like 10.
Dude, I'm the opposite. The past few days, I have been so tired, staying up way too late on Benzinga projects, and then getting online playing Elder Scrolls Online with my younger brother. Not a healthy thing to do.
No.
I caught it last night, and I got some sleep. So I'm here to cover for you. I feel rejuvenated.
I appreciate it, man. I appreciate it. What's on your mind today?
I want to look at the chips today. So we are seeing a lot of questions about Intel following the NVIDIA announcement, which is basically NVIDIA is going to do some server processing.
Yeah.
Which is a bread and butter source of income for Intel. Plus, Intel has just been getting spanked by AMD's affordable and high performance CPUs, which are great, absolutely great for gaming, and then for other things that are process intensive, like video editing and stuff like that. So it's being bought up by consumers, prosumers, and professionals alike. So we're going to take a look at the charts and see if it's a good buy for 2021.
All right, looking forward to that. I will see you on the stream. Well, you'll be on in a few moments.
All right, legendary.
Have a legendary show, Mr. Neil Hamilton from Get Technical. I just want to preview the rest of the day here on the Benzinga stream. Where's my damn calendar? Where's my graphic? Here it is. All right, I'm going to share my screen and show you all what we've got in store. I'm excited for the afternoon, actually, and I want to tell you why here as I bring my screen up. Here's our calendar for the day. Pre-market prep, obviously, on right now. Get Technical on in a few moments. Benzinga Pro at 10:30. SPACs Attack at 11. Power Hour at noon. Crypto Show at 2. Biotech Buzz at 2:30. My ETF Show at 3. At 3:30, normally we do pre-market prep at the close. I will be doing that, but I'm doing a special edition of that show today. I will be talking to the CEO of an IPO today. Too Simple. TSP is IPOing today. Cheng Lu, the CEO, will be joining me at 3:30 for the At the Close show for an exclusive. Going to talk about why go public now, their business. They're in the EV space. So I'm going to be talking to the CEO of ticker TSP, Too Simple, at 3:30. We've got the Cannabis Hour at 4 o'clock and Technically Options with Brad Weber at 5, rounding out the day. Okay, what other housekeeping items did I have for you? The Benzinga Pre-Market Prep swag giveaway. If you haven't entered that contest yet, you have one more day to do so. I'm going to throw the link in the chats, all of the chats. There's chat number 1. There's chat number 2. Check that out. Enter by subscribing. Also, guys, if you haven't subscribed to Benzinga Clips, it's our new YouTube channel that is not for live streams, just for short clips. Anything less than 10 minutes. Check it out. It's on YouTube. Benzinga Clips is the name of that channel, not Benzinga Briefs. We ixnayed the Benzinga Briefs thing. Next week is our next small cap event, the small cap clean tech event next Thursday. I'm going to play that trailer for you, which has the link to join that. easysmallcap.com. There's your URL. It was just up on the screen. For anybody wanting to try Benzinga Pro, go to pro.benzinga.com. You get a free 2-week trial. If that's not enough, enter the code on the screen there, YouTube20. That'll get you 20% off any Benzinga Pro subscription. You want to become an affiliate? Get paid to send us subscribers? Benzinga.partnerstack.com. You will get 30% of every new subscriber you send our way. That's going to be your wrap, guys. If you have not already, please hit the like button below. Leave us a comment. Tell me what you like, what you don't like. I can take it, I swear. Email us, premarket@benzinga.com. I'm done. Neil's live. Let's go. I will see you guys